Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Please go to study note number 1, accounting of shares and debentures. I will discuss issue of bonus shares. First we'll see what is the meaning of bonus shares. Bonus shares are shares which are issued to shareholders free of cost. That means they need not pay any consideration for these shares. They do not have to pay any amount for these shares. They are issued free to the shareholders. When company makes more profit, shareholders are entitled to get bonus shares. We'll see now what is given in the note. A bonus share is a free share issued without any consideration to an existing shareholder in the ratio of number of shares held by that shareholder. So normally bonus shares are issued in some ratio like 2:1, 4:1. That means if a shareholder is having 4 shares, he is entitled to get 1 bonus share. Issue of bonus shares will decrease the reserves and surplus and it will increase the issued capital, but which will not bring any cash inflow into the business. Share capital will increase, there will be credit to share capital, but there won't be debit to cash because these shares are issued free of cost. So there won't be any increase in cash, there won't be any increase in cash inflow, but it will decrease reserves and surplus. So as company is not receiving any cash, so debit will be to reserves and surplus. If company has enough sufficient amount of reserves and surplus, from that bonus shares can be issued. So journal entry for this can be reserves and surplus, that is general reserve, reserve fund, profit and loss account debit to share capital. Bonus shares can be in 2 ways. Sometimes company can make partly paid shares fully paid, or some of the calls are considered as paid even if they are not asked to pay. So this is by giving a bonus. Or company can issue fully paid bonus share to existing shareholders. Way to capitalize profits or reserves. First way is by paying up amount unpaid on existing partly paid shares so as to make them fully paid up shares, or by issuing fully paid bonus shares to the existing members. It is not necessary that company will make partly paid shares fully paid. Supposing if face value of share is 10, company has asked shareholders to pay only 4 rupees, 6 rupees is pending, then in that case, company will make it share of rupees 10 each, 6 paid even if 4 are paid. 2 rupees shareholders need not pay, company will give them bonus of 2 rupees. So either some part of partly paid shares company will show it as if they have paid it, or company will issue fully paid bonus shares to existing members, that is existing shareholders. As per section 63 subsection 1, a company may issue fully paid bonus shares to its members out of free reserves, or out of securities premium account, or out of capital redemption reserve account. So bonus shares to be issued only out of these 3 reserves: free reserves, securities premium account and capital redemption reserve. Bonus shares are not to be issued out of revaluation of assets, that is revaluation reserve. Free reserve means such reserve which is available for distribution of dividend to shareholders. And capital redemption reserve account is when a preference shares are redeemed or equity shares are bought back out of profits of the company, then in that case an amount equal to nominal value of shares bought back or redeemed is to be transferred to capital redemption reserve account. There are certain conditions to be fulfilled for issue of fully paid bonus shares as per section 63 subsection 2 of the company We'll see these conditions. A company can issue bonus shares if its articles expressly authorized to do so. A resolution is required to be passed by Board of Directors recommending its decision to issue bonus shares. A resolution is required to be passed by members in general meeting to approve board's resolution recommending issue of bonus shares. So these three conditions I will explain you in short. As per first condition, for the purpose of issue of fully paid bonus shares, it requires authorization of articles of association. Second condition, it requires resolution to be passed at board meeting for recommendation of bonus shares. And as per third condition, it requires resolution to be passed at general meeting of members for approving board of directors recommendation. And in case of members resolution, it must be mentioned that company's intention is to capitalize the profits or reserves, and in members resolution it is necessary to mention the amount of profits and reserves which are to be capitalized, that is profits and reserve which will get transferred to share capital, which will turn into share capital. We'll see few more conditions for issue of fully paid bonus shares. Fourth condition, as per section 63 subsection 2, the company has not defaulted in payment of interest or principal in respect of fixed deposit or debt securities issued by it. Company has not defaulted in respect of payment of statutory dues of employees such as contribution to provident fund, gratuity and bonus. So, if company has made any default in payment of interest or principal of any fixed deposit or any debt liability, then company is not allowed to issue bonus shares. If company has made any default in statutory payment of statutory dues to its employees like contribution to PF, gratuity, etc., then again it is not allowed to issue fully paid bonus shares. These are the conditions. Now we'll see sixth conditions. Partly paid shares, if any, outstanding on the date of allotment are made fully paid. So if company wants to issue fully paid bonus shares, and if shares are not fully paid, they are partly paid existing shares, then company will ask shareholders to make these shares as fully paid. That is, it will make final call. So you have to show journal entry of final call due, final call received, and then after that company will issue fully paid bonus shares. So this is the important condition for issuing fully paid bonus shares to members. Existing shares need to be fully paid for getting fully paid bonus share. Next condition, condition number 7, company must comply with prescribed conditions. So company should follow the conditions prescribed for issue of fully paid bonus shares. Now bonus shares shall not be issued in lieu of dividend. So that means bonus company has given extra shares free of cost to shareholders. So company is not entitled to give dividend. If it is considered like that by company, then it is wrong. Bonus shares shall not be issued in lieu of dividend. Even if bonus shares are issued, shareholders are entitled to get dividend. Now we'll see SEBI guidelines on issue of bonus shares. They are similar to conditions which are given in Companies Act, which we have just now seen. Company proposing to issue bonus shares shall comply with following requirements. The articles of association of company must contain a provision for capitalization of reserve. So that means this bonus issue should be authorized by articles of association of the company as per first guideline given by SEBI. Second one, the company has not defaulted in payment of interest or principal in respect of fixed deposit and interest on existing debentures or principal on redemption. So this is similar to what we have seen just now. Condition given in Companies Act. Third guideline, a company has not defaulted in payment of statutory dues of employees such as contribution to provident fund, gratuity, etc. So this is again similar to condition given in the Companies Act. Now what we have seen, first guideline, this bonus issue must be authorized by articles. But if there is no such provision in the articles, then company must pass a resolution at general meeting making provision in the articles of association for capitalization of profits, that is for issue of bonus shares. Few more guidelines we'll see. Fourth guideline, partly paid shares, if any, outstanding on the date of allotment as required to be made fully paid. This is also same as condition which is given in Companies Act. So for the purpose of issuing fully paid bonus shares, existing shares, if they are partly paid, it is to be made fully paid. Fifth guideline, no company shall pending conversion of FCDs, that is fully convertible debentures, PCDs, that is partly convertible debentures, issue any by way of bonus unless similar benefit is extended to the holders of such FCDs, though reservation of share in proportion to such convertible part of FCDs or PCDs. So that means if there are partly convertible debentures, that is debentures which get converted into shares, not fully but some part of it, that's why it is known as partly convertible debentures. Or if there are fully convertible debentures, that is entire debenture get converted into shares, in that case similar benefit is to be given to these debenture holders, that is they are also entitled to get bonus shares when they get converted into shares. And the shares so reserved, that is reserved for partly or fully convertible debenture holders, may be issued at the time of conversion of debentures, that is when the debenture gets converted into shares, that time these shares are issued to them on the same terms on which bonus issues were made. Few more guidelines issued by SEBI. Sixth one, the bonus shall be made out of free reserves built out of genuine profit or securities premium collected in cash. So bonus shares to be issued either out of free reserves. Free reserve is that reserve which is available to shareholders for getting dividend, or it is to be issued out of securities premium which is collected in cash. Next, seventh guideline, reserves created by revaluation of fixed asset shall not be capitalized. That is, reserve which is created by revaluation of fixed asset, which is known as revaluation reserve, which is not to be used for issue of bonus shares. Next guideline, eighth one, the declaration of bonus issue in lieu of dividend shall not be made. So even if bonus shares are issued, shareholders are entitled to get dividend. Few more guidelines we'll see now given by SEBI. Ninth guideline, a company which announces its bonus issue after approval of board of directors must implement the proposal within a period of 15 days from the date of approval if shareholders approval is not required, or 2 months if shareholders approval is required. So that means once company announces bonus issue after getting approval from board of directors, it must implement that within a period of 15 days of approval if shareholders approval is not required, and within 2 months from the date of approval if shareholders' approval is required. 10th guideline given by SEBI. Once the decision to make bonus issue is announced, the same cannot be withdrawn. So once bonus issue is announced, company should issue bonus shares. It cannot be withdrawn. Now we'll see accounting journal entries. On giving bonus by converting partly paid shares into fully paid. Some part of call company is making showing as paid without shareholders paying it. That is known as converting partly paid shares into fully paid. Capital reserve account realized in cash, that is received in cash only, debit. General reserve account debit, profit and loss account debit to bonus to shareholders. So out of these profits, bonus is to be given to shareholders. So bonus due to shareholders out of profit, which is shown in first journal entry. Second journal entry on making final call. So this is final call money due. Share final call account debit to share capital. And on adjusting final call, bonus to shareholders to share final call. If you see share final call due and share final call adjusted. So one debit, one credit. In the earlier entry, you are crediting bonus to shareholders. Now you are debiting bonus to shareholders. So net effect of the entry is accumulated profits, that is capital reserve, general reserve, profit and loss account, capital reserve of course if it is received in cash only, debit to share capital. That is the net effect of the entry. On issue of fully paid bonus shares, capital redemption reserve account debit, securities premium account debit, capital reserve received in cash only, debit, general reserve debit, profit and loss debit to bonus to shareholders. This entry is to show bonus due to shareholders. And on issuing fully paid bonus shares, bonus to shareholders to share capital. Bonus to shareholders, one debit and one credit. So net effect is accumulated profits account debit to share capital. Now we'll see illustration 15 so that it will be clear to you. Following item appear in the trial balance of M Limited as at 31st March 15. 60,000 equity shares of 10 each 6 lakhs. Capital redemption reserve 45,000, plant revaluation reserve, securities premium account, general reserve, profit and loss account, capital reserve 1,12,500 is given, and in the bracket it is given that including 37,500 being profit on sale of machinery. So capital reserve is to be utilized for bonus if and only if it is received in cash. So out of 1,12,500, only 37,500 can be used because it is received in cash. It is nothing but profit on sale of machinery. The company decided to issue bonus share to its shareholders at the rate of 1 share for every 4 shares held. Past necessary journal entries. It is desired that there should be a minimum reduction in free reserves. So bonus is in the ratio of 4:1. If existing shareholder is having 4 shares, he will get 1 bonus share free of cost. So for 60,000 equity shares, 60,000 divided by 4, 15,000 bonus shares will be issued. Capital reserve debit 37,500, only 37,500 is available, which is received in cash. Capital redemption reserve account debit, entire amount you can use 45,000. Securities premium account debit 52,500. General reserve account debit 15,000 to bonus to shareholders 1,50,000 and bonus to shareholders to equity share capital. 60,000 divided by 4, 15,000 bonus shares are issued. So equity share capital would be 15,000 into 10, 1,50,000. So net effect is accumulated profits to equity share capital, but you are supposed to show bonus is due to shareholders and bonus shares are issued. So that is how you are supposed to pass journal entries. Now this 15,000 to general reserve is balancing figure. 1,50,000 minus first 3 profits is balancing figure, which is to be taken from general reserve. In this particular video, I have discussed about bonus shares, conditions for issue of fully paid bonus shares as per Companies Act, SEBI guidelines on issue of bonus shares, journal entries on issue of bonus shares, and one illustration on issue of bonus shares. Thank you.